All right, guys. Today we are doing a Q&A with my good friend Josh Berry. New character unlocked for the YouTube channel. Do you want to give a bit of an intro?
I'm Josh. Been a developer for 7 years. Been in property for 11. And just building a food hall at the minute in Denton. That's me. And now I'm sitting here with you.
Awesome. So we asked on Instagram to give us both some questions. We'll probably both answer every question. I think maybe like 7 or 8 questions that we'll go through. I'll kick off. So, a good question to start with, very relevant. Someone asked, do you think there will be citywide Article 4 across the UK, which is a very interesting topic at the minute. Very good topic. I can't remember who asked it, but...
Very, very good topic. I don't just think citywide, nationwide.
I agree.
Think nationwide ban is coming in pretty soon. It will be completely standard all over the country.
100%. There's like it's massively oversaturated. Huge. I think you made a good point that they're literally building HMO rooms in the centre of Manchester.
Oh, yeah.
At what? £700 a month, all bills included, centre of Manchester, yet there's still people trying to cram people into rooms and charge £1,500 a month.
In Wigan.
In Wigan. Yeah, 100%.
Why would you live there if you've got them right in town? It's pointless.
I think it works really well. Like, I think HMOs in general work well on the social and supported living when there's massive demand, but also they work really well, I think more so down south, where the houses are naturally bigger, so people are going to have better rooms. The quality of the developer is they've got loads of experience. Like, the actual quality of the build is so good, but then also like when it is needed. And like down south's so expensive anyway, whereas up north you can rent a room for £1,000, but you can just go get a 2-bed house for £900.
100%. And I think if they do bring in Article 4 nationwide, I actually think it's a good thing. There's no other example in property where you can just build whatever you want, whenever you want, with no permissions. There's a reason that we have permissions. You need to make sure, all developers need to make sure that if you're building in an area, it fits the area. It's just standard morality as a developer. You have to do that. Article 4 usually gets brought in after the fact. It's saturated. That's usually what happens. But that is too late. They need to be able to make the decisions early on. And is there an ongoing demand for this? You can't just buy a plot of land and build on it. You just can't. You need permissions. So for me, it makes complete sense, even though it's not great for us in case we're talking about this as developers. It's not great for us if it is nationwide. But I think in the bigger picture, you should be getting permissions for anything you're building.
I think what I've seen as well is people are trying to fight against it, and they're almost like taking it as like a personal attack on them if they're a HMO developer. Whereas the actual smart people and the people that have been in the game for a long time that are all in on HMOs, well, they're smart. They understand that it's going to come in everywhere. Mm-hmm. They understand the council shut it down. Right now, we can't do this 7-bed. But like I said, they're smart. They'll go and do something else because they've actually got a brain where they can go and do something else. They'll go do blocks of apartments. They'll diversify into buy-to-lets, which people do in HMOs anyway should be doing.
And I don't even think as well, maybe, I don't know if you agree with this, but I don't think that bringing in A4 means that they don't want HMOs. I don't think it means that. I think they just want control, especially quality control. I think the developers, many of them that we know have mutual friends, the guys that are doing this properly, they're buying buildings that are suitable in suitable areas, and there's the correct amount of parking spaces, for instance, if you need it, or at least if you're not cramming them into a tiny little street. If you're making the rooms oversized, you're making them much bigger than they need to be. If you're doing them to very, very high quality, I think that's fine. I can't see any problems with that whatsoever, and I don't think that the planners will have any problems with it either. I think A4 was brought in as a response to shit HMOs.
100%.
It's in response to people buying terraces in secondary areas, banging 4, 5, 6 rooms in there, 1 or 2 share bathrooms. They're not good. They're not good for anybody. They're not good for the tenants, and they barely even work as well financially anymore. But I think that my suspicion is that when it comes in nationwide, I think it's about control and making sure that they're being done correctly.
100%. That's all it is. It's literally only doing it for control.
I wonder how many HMOs exist in the UK that are 4 beds with no license that nobody knows exist.
Oh, thousands.
There's no way to tell because you don't need to apply for any permissions. You can just do it right now.
I mean, you've probably been sent. I've been sent stuff before that's. This is a HMO. It's all right. Where's the license? Where's the fire doors, bro? Do you know what I mean? Like you get sent to stock all the time, especially in northern towns. Yeah, there must be absolutely thousands of unlicensed HMOs, but it's a control thing, and I think it's good. Like, again, people complaining, oh, we're different because we do high quality HMOs and we put fucking wood paneling on the wall.
The value
it's like
it's the nicest HMO he's ever seen.
Literally, you kind of got to sit back and go, that's all fine, but imagine someone in your back garden started building a house and said, well, actually, it's going to be the nicest gaff you've ever seen.
Internally.
You wouldn't care.
No one gives... Yeah, as a neighbour or a resident, you don't care.
It doesn't
about
benefit you, does it? It doesn't it's so nice to know that this fucking room next door to me's got a nice studio.
Thank God they put wooden panelling on the fucking wall. Great. What bothers residents is the fact that if you're gonna put adults in a house, there is going to be more cars, probably. And it's not. And you could say, I've seen planning applications that say the nature of the tenants means that they probably won't drive. That's fine, but you have to make sure you have to account for the fact that they might. Nobody screens HMO tenants and says must not have a car. I've never ever seen that in an advert ever. If you're going to advertise a room on a road in a street, you have to have parking, and that's a massive problem. And if you've got 4 adults in a house, the chances are they'll have visitors. There'll be more people driving up and parking on the road. There's no excuse for not accounting for parking for the sake of the residents. There's just no excuse for it.
100%. I agree. That was a good question, that, though.
Shall I do one?
Yeah, you ask one.
Are we saying who the questions are from?
I can't because I didn't actually write down who asked the question, but you can.
I'm not sure I want to. All right. The question that I've got is explain why the social housing provider left your property in a bad way. So for context, I posted a couple of months ago that I had a social housing property that was returned to me in a very, very bad way. Very bad. There wasn't a single wall that didn't have a punch mark, partial ripped out wall. It was bad. And I think you're probably best positioned to answer this question, but if I could answer it in a sentence, it would be social housing providers are limited companies. They're not exempt from any other usual business practices, and some companies are shit. And it just so happens that a lot of social housing companies go bust because it's a very difficult business to run, I suppose. So I think the key thing that people need to remember with social housing properties, it's just a limited company. Mm-hmm. It's not anything special. You've not found the secret sauce. It doesn't exist. It's just a company.
100%.
So if a person can fuck up a house, so can a company. It's as simple as that for me.
I think I see all the time people talking about, oh, we're working with RPs on these HMOs. It's like, no, you fucking not. There's no chance you are working with an RP. Like, people that don't know, you've got social housing, which everyone puts under the same umbrella. You've got supported housing. And these two different types of, I guess, terms within the industry, they fall under different companies that ultimately run these two different things, because social housing could be asylum, where they don't need any support, and supported housing is where a tenant comes in, you're raising claims to the council, so housing benefit claims, and then you're getting support workers to go in for 3 hours a week, whatever that term is. And a lot of the problems I see is, if it's social housing, there is pretty much no control of that property.
Oh, zero.
So you want to work,
literally zero.
You want to work in supported living, supported housing, but then even within that, there's bad ones, because I would probably say 90% of providers only care about the cash. They don't give a fuck about the tenant.
Agreed.
They don't give a fuck about you.
Agreed.
They just care about the cash.
Mm-hmm.
And you've had it in yours. We've had it in a ridiculous amount of ours. One where there's a big leak in the property that we've been paid rent on for 6 months, and we go in when the provider went bust, ironically, and there's no tenants ever lived there, and the leak's been going on for 6 months, and the house is fucked.
Yeah.
But like they don't care.
I think
they really
people
don't
just
care.
assume that a social housing company is more virtuous than a family, and it's just not the case. And the amount of, I mean, just go through your Instagram. I mean, I remember the video that you did where was there a fire at one of your HMOs?
Yeah.
And it was just left once. The big social housing provider that went bust that we both got stung by, same as you, it wasn't as scale of yours, but I had a HMO that had never, ever been lived in, was being paid rent. It's not surprising that these companies go bump.
Especially when they've got thousands of these.
I was being paid £1,200 a month for a property, and they didn't have anyone in it for 6 months. They'd spent
And for context,
7, 8, 9 grand.
Yeah.
On nothing.
And they had 4,000 units. So, and I like their occupancy across that whole portfolio is probably like 30%.
Yeah.
Like probably not even that.
Yeah.
Because you actually can't get the money in quick enough from the councils. But like, again, you need to think if you go into social housing that the tenants you're working with are massively different. I literally put an Instagram story out yesterday of a tenant, so a homeless tenant that lives in one of my houses. What an amazing thing to do. Great. Homeless guy is now in a house. Amazing. Locks himself out of his room. The support worker doesn't have the spare key because they've lost it. And then the homeless guy rings the management agent, who then rings us and says, this guy needs to speak to you. So Alex picks up the phone to this homeless guy. Well, he's not homeless anymore because he's got a house. And the guy goes, I need to get into this room within the next 30 minutes or I'm going to kick the door in. So, like, you're dealing with a completely different type of tenant, and, like, you have to treat them so much differently. Like, it's not black and white. It's not, like, everyone thinks that, oh, it's so much easier because you just give it to a limited company, and this provider is just going to pay you the rent. But, yeah, but this provider's then getting that ball ache, and then when you get the property back in 5 years, it's probably going to be fucked.
It's just a company. It's just a company. They're not held to a higher standard than even a tenant. I mean, for me, I honestly think for me, there's maybe 5 really good social housing providers in the north at the minute, probably 5. And I can't get any properties with them because they will not take on any more properties because that's what the good ones do.
100%.
They make sure that they're completely stable, and those are the guys that last. So, yeah, honestly, I'm talking there's 5, and you cannot get properties with these guys.
I asked Theo, who's in the network, yesterday on our call. I said, oh, are you taking on any more properties in Birmingham? He said, I'm actually giving properties back. And that's like similar to what you just said. I was like, yeah, you're a good provider.
Yeah, exactly.
Like, that's a good provider.
Yeah.
Provider that goes, there's a 10-year lease, 5-year lease, 25-year lease, sign on a dotted line, we'll take it. Cash cow.
Yeah.
It is those, they're going to go.
Agreed.
What is one property strategy? You could only do one property strategy for the rest of your life. Which one do you do?
I would leave property. I think the answer's just got to be buy-to-lets, right? It just has to be buy-to-lets. There's no... it's not complicated. It's super simple. You've got really... if you look towards the future, it's very predictable what's going to happen with market prices in general, as in they're going to go up. It's not fraught with as many problems as, let's say, HMOs or social housing or rent-to-rent. And, you know, you'll thank your future self for it, I think. I think if you develop a portfolio and do it, you don't have to go all in. You don't have to be like, I'm going to have 100 buy-to-lets by the end of the year. You don't need to do that. You can save up for one, buy one every 9 months, keep doing that. Year 3, you can buy 2 every 9 months. Year 5, you can buy 3. Eventually build a portfolio over the course of 10 years and your future self will thank you for it. I think there's no better strategy than that.
100%. I completely agree. I'm going to cheat, though. If I think buy-to-lets, if you want to build a little bit of cash flow that gets you to, 5-10 grand a month over a longer period of time, because it will take that long, and longer-term wealth. But the one strategy that we both love for not necessarily building wealth, but building a cash pot that can then generate wealth would be trading.
I agree.
It's insane.
The only thing with property trading is you have to be, and people I think haven't grasped this concept yet, you have to be really, really experienced to be a property trader.
I think to be a good property trader, you do.
To be a good property, it's super, super risky.
Yeah, to get rich,
you have to be very experienced.
It's serious.
You can't just jump into it. If you've got absolutely no property experience whatsoever, you cannot just jump into trading. You can't do it.
I think you can jump into a different style of trading. Like the trading we're probably talking about would be buying something super cheap, put it in auction, taking a risk because you educated guess. And you've got so much volume, you've got a good pipeline, you can do 10 in 1 month, you can lose on 3 and win on the rest, break even on such and such.
You have to know that it's super cheap, though. You have to.
Oh, 100%.
And this is where I think, this is what I always say, property is about capital and competency. You can borrow both temporarily until you've got them both. So I think if you've got a mentor, a network, and you've got the capital, sure, you can do it. But if you want to get started in property trading from scratch with nothing around you, you've just got a bunch of money, you can't do it. It's not sustainable. You're going to lose too much money and it just won't work.
Yeah, I agree. I like it.
Fair?
What else we got? Do you want to ask one?
I've got this one. I'm not going to say who this is. Hopefully he watches this and get annoyed by my answer. Sure he will. Do you think it's possible to build a sustainable HMO portfolio right now? No.
No.
No, I don't. I think there's been a HMO gold rush over the last 3 years. I think the people that make the most money in a gold rush are the people selling the spades. And there's a lot of people selling spades and there's a lot of people making a lot of money. Brokers, banks. And I thought about something the other day about, we spoke a lot about commercial HMOs and how they're valued. And one thing that's always bothered me is why would the banks lend so much money on these HMOs to these non-commercial tenants on a commercial mortgage? And they're selling a spade. They're taking 5% fees for these mortgages and charging 3 or 4% of a base rate. I think these mortgage companies are absolutely pissing themselves. People are paying 8% for HMO commercial mortgages. 8%. Just because they think they've got accelerated returns because it's nice. And I think they're laughing. I think the brokers are laughing. I think mentors are laughing. I think everybody in the HMO world is making money apart from the people that own the HMOs.
Mm-hmm.
That's what I think is happening right now. And I think I think the end of the HMO era is coming to an end. But in the gold rush, there's still going to be people for the next 2 or 3 years digging around in that mud trying to find the gold, and it's not there. I promise you it's not there.
Mm-hmm.
It's gone. Gold's been extracted out of the ground. Does not exist. Leave it alone.
I probably sound like a hypocrite because we've got a big HMO portfolio. But I think if you're getting into it now, the amount of competition, if you're doing high-end stuff, like there's 5 on the road. Like I know people can't fill HMO rooms.
Me too.
That's an absolute fact. My HMO portfolio is super low-value areas. We've had them for three years now. We built them all out 4 years ago, that would mean, and we've been stabilising them for the last 2 years. I'm super happy with our HMO portfolio because we're not targeting the top end. We're working directly with councils. The rent's super good. We've got a big team that manage all of that stuff in-house, and we're going for refinances at the minute, and we're refinancing at bricks and mortar value.
Which is what you need, which is the only sustainable way to do it.
And we get offered, do you want to go to the commercial team and do that? No, I'm all right. So for us, it works really well, but I think that's probably because we got in early. And like even like the area we're in, Article 4 is coming in. So obviously as an existing landlord, I'm sat there like ka-ching, buzzing. It's great for me.
I think I'd even challenge you a little tiny bit on that because I don't think that you have to get in early to do that. I think you can do that right now. I think the biggest problem
is the price increases. When we were buying, we were picking up gas for like 60 to 80k probably. Whereas now that same house to turn into a 4-bed HMO, you're probably paying like 120.
The biggest, in direct answer to the question, my biggest problem with a HMO portfolio, the model is you extract all the value and all the liquidity from the property day one in the term with a with debt, with leverage, right? So you're extracting all of the liquidity out of it because it's a cash flow vehicle.
That's all it is.
That's fine. It's a cash flow vehicle. As long as you understand this is just a cash flow vehicle, that's fine. But what bothers me is that's against the entire principle of property. Property is about, you buy a property and you plant a tree and you get to sit in the shade of it in 10, 15 years. With a HMO, you've extracted all of that liquidity out on day one. So you can't do that. So, yeah, HMO portfolios in 10 years' time, even if they are worth more, the debt was so high on day one anyway. You've not gained anything. So it just kind of, for me, removes the whole purpose of property, which is it works best over a long enough time horizon. And it doesn't work well even across 3 or 4 years. What you've been buying HMOs for 5 years, and you're still stabilizing a lot of them.
Literally,
it's not a short-term play, and I think that the HMO model, it tries to be
100%.
I think it's very difficult to make it work.
I think what people always assume that they know what you do with your rental income as well, which doesn't frustrate me because it's an interesting question. But like, if I post on my Instagram that the portfolio does 60k gross, 40 net, obviously there's no finance costs in there, right? But people then go, you must be fucking caking it in. We go, no, because if I was a newbie HMO guy, I'd be going buzzing. I'm getting the cars, everything that I want, the house, holidays. Whereas we're sitting here and the whole of our rental income goes to paying debt down. Bear in mind, these aren't mortgaged at the minute. So technically, we allocate a little bit aside to reinvest, and we could take all of that and we could pay our investor back on the refinance. But what we're actually doing is, because we don't need that cash flow, we're paying our investor back as we're going, which means on the refinance at bricks and mortar value, like the actual debt on that property will be fairly minimal. Like the cash left in by the investor will be hardly anything because he would have been paid all of his cash back. But even then, when the refinanced at bricks and mortar value, I think we did some fucking graphs and all that shit. I think like 60% of the net income is going to go down to paying the mortgages off, which again, why would you do that? Because leverage and all of that, like that's a retirement pot. That's fucking, that HMO portfolio would be worth a fortune in 50 and 20 years time, and it'll have no debt on it. So like, people always assume that you must be caking it in, which in theory you are, but if you're using the money in the smart way, then it's the best way to do it. Whereas everyone else who just does HMOs at the minute just gets $2,000 a month cash flow and goes, sweet, get 5 of these and get 10 grand a month and I can do what I want for the rest of my life. But the issue then becomes, you live on the 10 grand a month for what, 7 years, 5 years, 7 years, 10 years. And then at the end of it, something goes wrong where you can't refinance it. You can't exit for the price that you want to exit on. And you've basically just had a job for 10 years paying you 10 grand a month because you built no wealth. I think that's probably the way to summarise it.
Yeah, the difference between what you're doing and what most HMO developers do is the whole model of the HMO portfolio thing is just acquiring debt. That is the model.
Yeah, literally, that's all it is.
There's a massive problem with the business model that is just about acquiring debt and not about a value exchange at scale. If you're raising finance from individuals, that's perfectly fine to do. That's raising debt, though. And then once you pay off those investors with a bank debt, with leverage, that's also debt. All you're doing is just finding ways to raise debt. That's the entire model. And I don't think that's sustainable. Mm-hmm. Business is about a value exchange at scale. And there's just none of that. You could argue that maybe the value exchange is people giving people somewhere to live, but there's just too much debt for it to be worth it. So,
agree. The only caveat I have to that entire commercial val HMO model is if they know that they're purely doing it for the cash flow because they're bringing the loan to value down across the whole portfolio with buy-to-lets and blocks of apartments, and they're doing flips, and they just use the HMOs as cash flow vehicle, I think that's cool. If you have enough money in the bank to be able to suffer a shortfall.
I agree. I was chatting to an investor the other day, and he said that he has a buy-to-let portfolio with 2 commercial 10-bed HMOs in there. I think that's absolutely fine. I think as an overall portfolio, I don't have a problem with it. But yeah, just in relation to the actual question is, I think what he was asking is, can you build an entire portfolio of commercial HMOs? And the answer is no.
No, definitely not. And I think the biggest HMO developers in the game would also say the same.
I think
I'm 100% confident in that.
Me too. Me too. Say no names. What else we got?
If you, I think it's similar to a question you got. You, Josh Berry, woke up tomorrow. You are stripped of all your properties. You have £0 in the bank, but you've got the knowledge that you have. So you keep your knowledge.
Oh, okay.
That obviously you can share with everyone watching.
Yeah.
What do you do in property?
In property, I would build a portfolio of commercial Val HMOs.
Next question.
Next one. What would I do? I think I would make sure that I understood the difference between building a property portfolio and having a service or cash flow based business that's not in property. I think that would be the biggest thing. I think it would just be the understanding that the best way to invest in property initially for probably 5 years is on the side. Mm-hmm. I think that, are we assuming that we're starting with no money or with money?
No money.
No money. So yeah, I think it's just the understanding that it is not a full-time job for many years. It's got a huge capital requirement. The biggest guys that we know that are buying and selling properties, they lose so often on properties, and it's completely normal to them, but to a normal person, they just cannot sustain those losses early on. So I would say that, yeah, if I was to do it all over again with nothing but with my existing knowledge, I would not rush it. I wouldn't go out and raise a load of capital if I didn't know what I was doing and I didn't have a network or a mentor, and I would take it easy.
Mm-hmm. I think that's good advice. I think that's something I only learned like 2 years ago when shit hit the fan. And the income went to zero. But I agree. I'd build a cash flow business that can be deal sourcing, can be anything in property. But if you are very, very good at something else, let's say you can build amazing websites. Let's say you are a great photographer, videographer. Well, set up a business in that industry which can cash flow you and free up some time to be able to learn the game of property.
100%.
And then at the same time, learn what you think you want to do in property. Get around good people. Go and meet people. Like, people don't meet people anymore. Mm-hmm. Like, just go and have a coffee with someone who's in property, who's got a big portfolio, or who's got good cash flow businesses, and learn what they do. I'd build a cash flow business in property or not in property. I would then understand how to raise finance. I'd raise finance, but I'd flip properties for 2 years, 3 years minimum.
100%.
Before I held anything else. And then you built the pot up, your cash flow business is great, cash flow business pays for your holidays, everything like that. You flip money, goes into a pot, keeps replenishing, and then eventually you can invest it and build wealth.
Fully agree. I think in property, there is just as much value in completely failing, or let's say there's as much value as avoiding a catastrophic failure than growth. Mm-hmm. I think there's equal value in both. And people are obsessed with growth in property. I need more, I need more, I need more. But I think if you give just as much time to avoiding a catastrophic failure, that's more than half of it, I'd say. And in property, it's easy to do.
100%. I agree.
I'm going to throw in a question for you.
Go for it.
That no one's asked, but you just raised it then. You said that if you were starting again, you'd go and meet people for a coffee. I always have the argument that I think that networking is a complete waste of time. Mm-hmm. I think most of the time, the people that you want to meet are not at networking events.
For sure.
Because they're not paying £20-25 for a ticket to go and speak to you who knows fuck all about anything.
For sure.
Those people are not at those networking events. Should you go to networking events if you're just starting out, or should you just leave it alone?
I think you can feel like you're making big strides by going to networking events. And it looks like you're doing a lot of stuff, and it'll probably at the time feel like you're doing a lot, but you're actually not getting a lot of stuff.
I think it's all signal, no noise.
Yeah, literally. I think there are probably good networking events out there. Obviously, I'd say I'm biased, but like I wouldn't say a specific networking event. I'd join a community or a network with people that are doing what you want to do, whether that's AFPI network, whether that's another one or someone else's. I don't give a fuck. Like, join, if you want to if I wanted to become a footballer, for example, like I'd go and try and get in rooms with people that are very, very good at football, and they understand how do you go and play for a club, how do you get signed by an agent, how do you go and do this, how do you get paid, like all these different things. So I would network, but you need to do it in the right way. Don't go to pointless networking events where it's just fucking going out for drinks and speaking to a broker, because it's a waste of your time and a waste of their time. But I think getting around good people, if you're smart enough, is actually fairly easy to do. Yes, it's going to cost you money, of course it is, but ultimately you're investing into it's corny to say investing into yourself, but like you're investing and getting yourself in that right room. Because if you want to get in rooms with people that are way further ahead than you are, and you expect to just get into those rooms when you've got nothing to add, then you're a fucking idiot.
I agree. I think the best way that you can do that for me is by creating value in yourself so that people want to be around you.
For sure.
Rather than the other way around. Rather than paying to go to networking events and expecting to meet somebody that's going to give you £1 million.
For sure.
90% of the time it doesn't happen. In property, once you get into the trenches of property, you start to realise, I think, very quickly that a very, very small amount of people are doing 80% of everything that you see. We're in a property group on just on WhatsApp. It's just lads that one of our pals set up. We just went for a drink one day. There's 15 lads in there. There is more value in that group than any room you could ever get me in that I would pay to be in, by far. So yeah, I just feel like networking or networking events when you're first starting out are mainly pointless.
Yeah, completely agree.
Oh, here's a question I got asked yesterday.
Go for it.
What's your beef with stamp duty reclaims?
See, I'm going to leave you to answer this because I'm not very well versed on. I've just been a good boy and paid my stamp duty.
Which is the correct thing to do.
Yes. Thank God. Fuck hell.
I posted a couple of times in the last year about stamp duty reclaims. And for those that don't know, there was a loophole, in inverted commas, if anyone's listening, that meant that you didn't have to pay stamp duty on uninhabitable properties.
I thought you were going to start scrapping in a group chat yesterday, or the day before.
I could have done, honestly. Because it's really easy to get this wrong. I'm not blaming people for getting it wrong. To get to the actual answer, you have to read that entire case. You really have. Or you need to do what we did and get a solicitor involved, which was a couple of years ago, to see if what you're doing is correct. And it turns out it wasn't correct. There's no loophole that exists for uninhabitable properties.
Yeah, definitely not.
There never has been. There was never a loophole, only a misunderstanding. And the misunderstanding was there was a case at a company called Bewley Limited for HMRC to not pay stamp duty. They said that it was because the property should have been demolished, which is very different to it not having a kitchen, which is what people claim for. People even claim for, well, the most common one that I hear is structural problems. That is not uninhabitable. Uninhabitable means it has no roof and 3 walls. That's what uninhabitable means. So the original Bewley case was not about whether or not it was uninhabitable. They bought the property that had a surveyor's report saying that the structure is that bad, the asbestos is that bad, that this needs to be demolished. So the person or the company, Bewley, that was buying the property, they didn't buy it to renovate it. They bought it to knock it down and build houses. So their argument is not that it was uninhabitable, it's that it should have been land. And land has a very different implication for stamp duty. You got a much bigger free period. I think it's £250,000, up to £250,000. There's no stamp duty whatsoever. They knew at that point they couldn't claim that it was land because there was a structure on it. So what their argument was, well, we'll meet you in the middle. It's not a residential property that's habitable. It's not land. So let's settle on a non-commercial element, which is much lower. And that's what they won. That's the case that they won. In the actual case, it does not say uninhabitable once in their defence. That word doesn't exist. It only exists in one sentence, and that's when HMRC said to them, asking them a question, and the question they asked was, if you were to remove all the asbestos tiles, would it be temporarily uninhabitable? To which the answer was yes. But that had no bearing on the decision whatsoever. It was just a question they was asking. They was just looking into it. So all these claims, if you get caught, you will have to pay it back. The main...
They will get you.
They will get you.
HMRC.
But here's the thing that people argue with me against, right? They say, yeah, but I got it paid back. I applied for it. I got the money. So therefore it's fine. That's not how HMRC work. HMRC, and anyone can Google this, it's called Process Now, Check Later. HMRC do not have the capacity to check every single case. And I'm not just talking stamp duty cases. If you submit company accounts, HMRC doesn't ring you and go, are you sure about that coffee you put through 3 years ago? Doesn't happen. HMRC assume that you're correct. It's self-assessment. So if somebody applies for a stamp duty refund and then they get it back, it's because it's an automatic process, not because somebody stamped it and said, yes, you shouldn't have paid stamp duty. That's not what's happened. So just because you get it paid into your account does not mean that you've been successful in your claim. It means you're going to get investigated at some point because you shouldn't have had that money back.
Do the companies that do stamp duty reclaims, do they have any insurance like an accountant or a solicitor would? I would assume no, because that's suicide, right?
I don't know the answer to the question because I've tried to figure out exactly what the implications are for these stamp duty reclaim companies. Now, anyone can just set one up and just do it on their behalf, right? It's an advisory service. So people say often that there's some protection if they do it. I don't think there is. I don't know this for sure. Someone can correct me. I don't think there's any protection whatsoever. I think you as an individual are responsible for any tax that you submit, whether it's stamp duty, whether it's company accounts, corporation tax, VAT refunds, whatever. I think you personally are responsible. Even if you have an accountant that works for you, you still have to sign your own accounts at the end of the year to say that you accept them. So I don't think it offers any security whatsoever. And my suspicion is the companies know that as well. That's why they do them and then just close the SPV. So I'm pretty sure that there's no protections whatsoever. I don't think you're going to get away with it.
I'd just pay the stamp.
Just fucking pay it.
Fucking hell, I just paid like 30 odd grand in stamp for a house in London.
Pay it. So my understanding as well of the tax code is that you'll have different categories of error. So you'll have, in simple terms, you made this mistake and you knew that you was doing it, or it's a genuine mistake that you didn't know that you was doing. So what they'll do is they'll say, if we believe, or if HMRC believes that you made a mistake and you didn't know that you was doing it, they'll just make you pay it back with no interest, with no fees, with no charges. If they think that you did it on purpose, that you knew about it, that it was a really obvious claim, there's a very high chance they're going to charge you interest and fees on top. So my suspicion is that if you've got a property that you know wasn't a real claim, if you ripped a kitchen out and it was obvious you ripped a kitchen out, and then you submitted photos of a perfectly fine house that was a house with a roof and walls, with no kitchen units,
No boiler,
you don't have to pay your stamp duty, obviously. That's not uninhabitable. You can just put a kitchen in.
Yeah.
It's fucking stupid. Nothing is stupid. So
I completely agree. I mean, I've always thought that because I thought, well, every house I buy, I'll just go rip the boiler out and just never pay any stamp. And like HMRC, like I always talk to Alex about this. I'm like, Alex, can I do that? He goes, Alex used to work in tax business partner. So I know you can't do that. I go, well, no, because what about this? He's like, mate, the thought of that already.
Yeah, you're not going to outsmart HMRC.
They every single angle you could possibly think of is covered.
Yeah.
So just don't fuck with it. Just pay your fucking tax.
And the important bit, right, is whenever I have this conversation with somebody about this, they send me a load of messages back with a big paragraph that they've copy-pasted from businessaccountancyreturns.org.uk about why you can claim a stamp duty refund. Just go on the HMRC website, go on the actual government website and search it. There's legitimate claims. There are legitimate stamp duty refund claims that you can make. You don't need to find some niche website to give you information about your own tax. Go on the tax website, go on the Gov website, it's right there. You really don't need to try and outsmart HMRC. You're not going to win.
And there are legitimate ways where you don't have to pay stamp.
And by the way, every single person since the Bewley case that has claimed non-inhabitable or uninhabitable, every single case that's gone to court since then has lost. 100% of cases. So I think it's funny how people have created a case law from something in 2009, but not case law from every single one since then, where they've lost every single time.
It's very true. Very true. If you do want to not pay stamp,
Actually not pay stamp.
there are ways to do it. But go on HMRC's website, because it literally tells you all the exemptions. There's quite a lot. There's some on there that are proper surprising as well. There's a relocation stuff.
Relocation, there's a chain breaker. If you buy a property,
That's a very good one. If you're going to save a chain.
you're going to save a chain.
Probate.
Complete. I think probate is certain cases.
Yeah, it is. It's not every single
It's not every
probate
single
property.
probate case. It's very, very specific, but it's all there in black and white, and it's pretty easy to read, to be honest. You don't need to find a niche website to try and support your claim of a
That's why property trading is
fraudulent
great.
claim.
100%. That's why property trading is so good, because they literally have stamp duty savings for property traders.
You have a section on HMRC website about property trading discounts. It exists. Completely legitimate, completely legal.
Yeah.
It's fine to do.
Love it. Any more questions, or are we done?
I think we're done. I did get a question from my builder, Ryan.
Big
you
dog.
watching?
Ryan, when we go in Hickories?
How do you get started in property? I'm not answering that question. We're not on a talk show. We're not on Trisha.
I don't think I've got any more. We should probably do these more often, because I think people do podcasts where there's an interview and there's always an agenda in the podcast from the person who's getting interviewed to show themselves in the best light and to sell stuff, which is fine. But I don't think there's anything out there where people sit down and have an actual chat about recent relevant stuff in the industry.
with no planning whatsoever.
Yeah,
I've not spoke to you in days, and I only found out the questions 5 minutes before we sat down. No planning whatsoever. It's just chatting shit.
It's just knowledge. It's in there. But yeah, thanks for listening. If you want to see it again, drop a comment.